the tech world is shaking. And not in the way you think. Oracle, one of the biggest names in enterprise software, has just triggered what some are calling the AI collapse. Yes, you heard that right. While everyone else is chasing the latest AI frenzy, betting billions on ChatGPT clones, self-driving tech, and generative AI, Oracle quietly pulled a move that sent shockwaves through Wall Street. So what actually happened? Why are tech billionaires suddenly dumping stocks like there is no tomorrow? And why are they quietly buying silver? Today, we're going to unpack this, piece by piece. And by the end, you'll understand not only what this means for the AI industry, but also what it reveals about the real state of the global economy. Let's start with Oracle. For decades, Oracle has been the backbone of enterprise computing. They've built a fortress of cloud infrastructure, databases, and software services that companies around the world rely on. And yet, despite being a titan of tech, Oracle has just issued statements and strategic moves that sent investors scrambling. Here's the crux. Oracle announced a major pullback in their AI investment strategy. They're scaling down aggressive AI experiments, slowing AI acquisitions, and even freezing certain AI-driven cloud expansion plans. For most people, this might sound like a business-as-usual decision. But for a company as influential as Oracle, this is seismic. Why? Because Oracle isn't a small startup. They're not a venture-backed AI lab. They're a multi-billion-dollar company that doesn't take risks lightly. When Oracle slows down AI spending, it signals one thing loud and clear. The AI hype is overheating. And this move immediately sparked panic among tech investors. Within hours of the announcement, hedge funds and billionaire investors began unloading tech stocks. And we're not talking about small-time players here. We were talking about some of the richest people on the planet, those who build empires on the back of software, AI, and tech innovation. Now, here's where it gets even more interesting. These same investors aren't running for the hills entirely. They're shifting into something you wouldn't expect. Silver. Yes, silver, the classic safe haven metal. While the world obsesses over AI stocks, the ultra-wealthy are quietly hedging against a potential tech crash. Why silver? Let's be clear, it's not just nostalgia. Silver has historically been a hedge against financial instability and market bubbles. It's tangible, finite, and unlike digital assets, it can't be wiped out with a software glitch. Billionaires see the tech market's current state as dangerously inflated, and silver offers a safety net. So, what does this mean for the average investor? For starters, the AI gold rush might not be as golden as you think. Oracle's move isn't just a company decision, it's a warning signal. When a giant like Oracle steps back, it often predicts broader market trends. We're potentially looking at a cooling period in AI investment, with valuations that might tumble dramatically. Here was the kicker. Tech investors are notoriously late to realize when a bubble is about to burst. The initial wave of excitement around AI created mind-boggling valuations for companies that are still pre-revenue. Some of these startups were being valued at billions of dollars, purely based on AI hype and potential. Oracle AI's conservative pivot throws a harsh spotlight on the fact that potential alone doesn't equal sustainable growth. But don't panic just yet. Market shifts like this are also opportunities. Knowing where the billionaires are moving can be a powerful signal for anyone looking to protect their wealth, or even grow it strategically. And this is where I have to make a quick plug. If you want to understand how billionaires think, their strategies for wealth preservation, and the exact plays they're making in volatile markets, check out the Billionaire Playbook. This resource isn't just theory, it is based on real patterns of some of the world's richest investors. It can give you insights that most retail investors never see. Back to Oracle. Their move is likely to ripple across the tech sector. Companies heavily dependent on AI hype, think startups in generative AI, autonomous tech, and speculative cloud solutions, could face significant downward pressure. We might see valuations deflate, layoffs increase, and acquisition deals stall. At the same time, other tech giants might follow Oracle's lead. Big corporations often take cues from their peers. If one heavyweight starts tempering AI spending, others might reassess their strategies, especially if market data shows diminishing returns on AI investments. This is also a reminder that the AI bubble isn't just about technology, it's about human psychology and investor behavior. FOMO, or the fear of missing out, drove a massive surge in AI-related stocks. But FOMO can reverse just as quickly. Oracle's conservative stance is essentially the market's early warning siren, and the smartest investors are already reacting. Let's talk numbers for a moment. Tech stocks surged over 30% in AI-focused sectors in the last year alone, yet actual AI-driven revenue growth in many of these companies is minimal. Oracle's move highlights a mismatch between hype and reality, a classic bubble scenario. Investors chasing astronomical returns without real underlying revenue often get caught when a major player signals caution. And here's why silver comes in again. When paper assets, stocks, options, and digital investments become volatile, tangible assets become the go-to. Silver, gold, and other commodities have historically provided stability during tech collapses or financial crises. The fact that billionaires are quietly increasing silver positions is a red flag for anyone who thinks AI stocks are guaranteed wins. Now, you might wonder, is this a full-blown crash or just a correction? The truth is, it's hard to predict the exact timing. But Oracle ES move makes one thing clear. The era of reckless AI speculation is likely coming to an end. Investors need to be cautious, diversify holdings, and consider hedges like precious metals. Let's break down the potential consequences step by step. First, high-flying AI startups could see funding dry up. Venture capitalists will become more selective, funding only projects with real revenue potential. Second, layoffs could spike in companies that overextended on AI hype. Third, we may see a shift in M&A activity. And here's the long-term perspective. AI isn't disappearing, far from it, but the era of unchecked hype and sky-high valuations is ending. The technology will evolve, but investors need to focus on sustainable growth, practical applications, and realistic revenue models. Oracle's cautious approach signals that even tech giants understand the importance of measured, strategic investment. So, if you're watching the market, pay attention to the following. 1. Announcements from large tech firms about AI budgets. 2. Changes in venture capital funding patterns. And 3. Movement of capital into precious metals and other tangible assets. These indicators often precede major market shifts and can help you make smarter financial decisions. Finally, let's circle back to the big picture. This is a wake-up call, not just for investors, but for the entire tech industry. The AI frenzy was fueled by imagination, fear of missing out, and billions of dollars in speculative capital. Oracle's decision is a reality check, a reminder that even the most promising technologies must align with financial prudence. For those willing to pay attention, this is a rare opportunity. Opportunities are hidden in caution, in understanding where the billionaires are hedging their bets, and in identifying which assets have real, lasting value. And remember, knowledge is leverage. Understanding market psychology, corporate strategy, and macroeconomic shifts can be far more profitable than chasing the latest tech fad. In conclusion, the AI collapse may not be an instantaneous catastrophe, but Oracle's actions mark the beginning of a pivotal shift. Tech billionaires are quietly adjusting their portfolios, signaling that the hype-driven AI bubble may deflate sooner than expected. Silver is rising quietly in the background, acting as a lifeboat for wealth preservation. Investors need to be vigilant, think strategically, and avoid getting caught in hype cycles. The giants of tech are playing chess while the public is still playing checkers. And if you want to learn the exact moves and strategies the world's wealthiest are making right now, the Billionaire Playbook is your roadmap. The AI gold rush is not over, but the rules have changed. The era of blind speculation is fading, and the era of calculated strategic investment is here. Those who adapt now will be the ones who thrive in the next wave of technology and wealth. Stay alert, stay strategic, and always follow the moves of the market giants. They often know something the rest of the world hasn't figured out yet.